All right, I think everybody's here now. Today, it's gonna be in English, so I hope it's okay for everybody. And thanks a lot for joining us today. And I just want to say thank you to the co-founders of Polyverse Project. Today we have a really important really important person with us, which is like Zach. So I want to say hi to Zach. And how are you today? How is everything? Everything is great from your side?
Hi, Merv. Everything is great. Thanks for asking. And thank you for calling me important.
Of course, yeah. I saw that you're having a lot of fun in like Turkey. And currently, I'm in San Francisco. You're in Turkey. I hope we can find a way to meet, maybe in some point, maybe in Europe or somewhere else.
I would love that. By the way, I was just at the Polyverse office earlier today. I hope you're not too jealous.
Oh, I am. I am. That's so good. Yeah, that's great. Yeah, I've been there once. It was so much fun. I don't know what you guys did, but yeah, I had a lot of fun there. So, how was your experience so far? How's it going?
It's great. I love visiting Turkey because I think there's so many talented people and creative people in this country. I always meet more and I always learn more. Um, Frankly, it's humbling. So I've been having a great time.
Yeah, that's perfect. Great to hear that. Yeah, I saw like some videos and stories. Yeah, I'm jealous. Okay, yeah. I will try to make it also quickly. So yeah, so let's just kick off like today's talk. I know that like so many of you had joined before this Polyverse talks like this time. I'm gonna be the moderator. Like maybe like some of you know me. I'm advisor for the Polyverse project in terms of like the community building in Web3 and also like marketing parts in Web3. And also like I am really like curious about Zach and like his experiences in like of course in Turkey also, but also I mean like in life. Maybe if you want to just share, like, can you give us a quick intro about yourself?
Sure. Well, hi everybody, first of all, and thanks for joining. Really thrilled to have you all here. So, by way of background, uh, my name is Zach Finkelstein. That much you probably gathered. I've actually spent my career doing a few different things. So, if you'll believe it or not, I actually started my career at the central bank in the United States, the Federal Reserve. I worked in monetary policy. So, I've always been a big fintech nerd. I love to learn how the financial system works and how we can improve things. And, that's something that's always been very exciting to me. But I ended up moving on to do a few things. So, for one, I actually was the vice president of corporate development at a company called Kareem, based in Dubai. Kareem is like the Uber for the Middle East, everywhere from Pakistan to Morocco. And it was amazing. We scaled to 15 countries. We actually ended up getting to about, I think it was a million rides a day. And we sold it. The best part is we sold it to Uber for 3.2 billion, um, which was just a really fun journey. So to get to sit on that side of the table and see what entrepreneurs and operators experience and their struggles was really amazing. I got to then move into venture capital, which actually I had done a little bit before at a fund called Class 5. And at Class 5, we invest mostly in emerging markets, actually. So when I say emerging markets, I mean places like Turkey, or like the Middle East, but also like Latin America, Southeast Asia, and all sorts of places where technology is just beginning to take hold in a really meaningful way. Is that enough? Is that a good story, Merv?
That's perfect. That's perfect. Yeah, just like thanks a lot for sharing like all the details. And actually, like your career kind of started with the investment banker, and afterwards, like you became a like investor. That's right.
That's true. I skipped over the most shameful part of my career. I did used to be an investment banker. That's true. Thanks for telling on me. I
I was just, checking your profile,
no,
trying to
you're right.
find the,
I,
the pinpoints and
I
like.
was I was an investment banker. I'll come clean. I was an investment banker at Citibank. So I
Okay.
helped companies in media, telecommunications, and technology
Mhm.
to go public, to raise bonds, sometimes to buy each other. Uh, it was kind of fun actually, but I like to pretend that I've just worked in technology my whole life.
I'm actually also curious about. I saw that you named by Forbes magazine, 30 under 30. Is that true? Is that correct? Or maybe?
Oh, yes, it's true, but I don't tell people anymore because now Sam Bankman-Fried, the guy, from who just went to jail was 30 under 30. So I don't like to tell everybody anymore. It was a better thing
Oh my
before that,
god.
right? Before the FTX fiasco.
Oh yeah, tough luck. I know, but like it's great to you also recognize like it was good, yeah, before, but now yeah. So
Yeah,
many people are
now
suspicious
now
sometimes,
I'm
I
like
know.
there's so many crazy people who've been 30 under 30. I think Elizabeth Holmes from Theranos was too. So I'm just not sure it's a good thing anymore. But you're right. So I was named 30 under 30 for some of the investments that I was doing in emerging markets back when I wasn't yet 30. And I'll let you guys in on a secret. Now I'm over 30 by quite a few years. Sorry to say.
That's great. Yeah, thanks for sharing. And also like congratulations. It's a great like recognition. Like I hope also like we can do it also once because once in a life, 30 under 30 is a great moment. So yeah, that's great. And as a VC, it's a great the career journey for you. I'm super like interested to learn more about from you about like you kind of control of the like the all the investment decisions, and what do you prioritize when it comes to investing, and for example, like what are the non um, negotiables you always keep in mind?
It's an excellent question. So a couple of things. Look, for me, let me give you a little context before I jump straight into it. We are pre-seed investors. We are typically the first money into a company that's very new, right? Sometimes these companies don't even have a product yet. More than a few cases, they didn't even have a name yet. So what are you really investing on? When we talk about what we're looking for and what we're prioritizing, it's all about people, right? And to me, if I were to prioritize the most important, then we can go into in more detail later if you're interested, but to me, the most important things about people is A, integrity, right? It sounds cheesy when I hear it coming out of my mouth,
Yeah,
but I
it's
mean it.
pretty important. Yeah.
Yeah, if you don't have trust, you don't have anything, right? It is a
Hmm.
precondition for everything else. And it's an interesting balance for an entrepreneur because you should tell your best story, right? And you should even
Hmm.
go out on a limb, but you at the same time, you don't want to cross that bridge into being dishonest and not truthful about everything. So it's very important. Another thing that I would say that is just universal is
Hmm.
grit. What do I mean by grit? I mean determination. I mean, look, being an entrepreneur, and some of you on this call are entrepreneurs. Being an entrepreneur, I think, and this again, everything I say sounds cheesy, but I mean it. Being an entrepreneur is like the hardest job in the world, right? I mean, there may be a few harder jobs, but I can't think of any on the top of my head. And the reason it's so hard is it's very emotionally volatile, right? So any of your entrepreneurs on this call know it already. One day you're on top of the world, and the next day everything's going wrong and your company is about to run out of money or something horrible. And the worst part of all of that is it's kind of lonely too, right? So you're like this person who you can't tell your employees that everything's going badly, right?
Yeah.
you know you
Yeah.
you can't tell your friends, they don't want to listen to that. So like you're kind of
Hmm.
there alone dealing with the great emotional roller coaster, so you have to be so determined. you can't get knocked on your butt by anything. So to me, it's a combination of integrity and determination, and there's a lot of other things, but they're more situational.
Yeah, that's perfect. I think like the emotional roller coaster is the best word for like being an entrepreneur, and at the same time maybe being a venture capital also. But I'm not sure for like the venture capital side how it feels like. I haven't experienced that before. But yeah, like as an entrepreneur, I can say that it's like an emotional roller coaster, and you really need to believe in yourself, and you need to emotionally stable like almost every day and all the time. And yeah, it's not so easy. And can you share some tips for entrepreneurs when working with investors?
Yes, it's such a good question, and it's there's so many directions I could go. But the interesting thing for me is, look, being smart is not enough. By the way, having the qualities I already discussed is not enough, right? Having a great idea, it's not enough. You have to learn to speak the investor's language. And this is not an easy thing to do. And when I say the language, I don't mean you need to know all their technical jargon. That's not what I mean. I don't mean literally language. I mean, you have to know what investors want to hear and what they're used to hearing. And this is the kind of thing where it's like, you have to find people who have raised money before who can teach you. Or maybe you find some investors who, are willing, maybe they're not the kind of person who's going to invest in your fund, but maybe they'll sit down with you for 20 minutes, get on the phone and teach you. I mean, it's so, and I actually, by the way, we're first money into most of our companies. I have to coach our founders, right, on how to do this, and a lot of them are very sophisticated people, and it takes time to learn. But it's like, let me try to think of some tangible examples for you. Look, investors, we were just talking about this with somebody earlier, actually. Investors like to see social proof. They like to see that maybe their friends are involved, right? Maybe you know some of the same people. Maybe one of your friends is angel investing. Maybe one of their friends is, just says your idea is a good idea, or is advising you. They like social proof. um you know Other things they like to see, for example, among other things, that you understand that they want, a really big opportunity. They don't want to hear about, like, profits in the next 2 years. Now they want to hear that you think about that in the future, but it's like, I'm being a little coy, Merv, because there's so many paths here. But what I want to say is, don't assume you know how to speak to investors just because you're smart and have a good idea. There's a whole playbook of how to do this, and maybe we'll get into some of it later. But it's like, there's things they like to hear, and it's not always intuitive.
Yeah, definitely. And I think also like the communication is the key kind of like we like as like entrepreneurs, we need to like stay in communication with the investors. I don't know, what do you think about this? Like the time and resources for the business. I think like we need to be connected all the time, right? And also sharing the milestones maybe and significant marks.
Oh, I was on mute. Sorry.
It's
Yes.
okay,
So,
totally
well, look,
fine.
communicating with investors, yes and no, right? I think, look, let's talk about, like, let's say you don't have any investors yet, right? If
Okay.
you
Yeah.
over, let's start from that point. Let's assume you have no investors, and it changes, right, as you get more investors, and it changes with every stage. But let's assume you have no investors or no big investors, right? You
Mm-hmm.
want to be careful about over communicating with potential investors, because guess what? Most investors are looking at, I don't know, between 4 and 7 companies a day, and they don't want to hear from you every minute. Doesn't matter how good you are, right? Because they're hearing from too many people. And and sometimes it can even get annoying. I hate to say it, right? So you need to figure out how to use your communication effectively. Now, Merv, I still agree with what you're saying. It's very time consuming to raise capital, and it can make the business suffer, but it's necessary. What I like to say to founders when it comes to communicating around fundraising, what you do is you might spend a few weeks having very casual conversation with investors. Don't even say you're fundraising, right? Hi, I'm Zach. I'm working on this. I just wanted to talk and get your advice. You do it for a few weeks, maybe just to get a little feedback, get to know what people are thinking. That's one way to start. Not entirely necessary. Now, the next thing you do is you talk to your friends and your friends' friends and your friends' friends' friends, and you get as many investor intros as you can. And you do it all at the same time. I like to say to people, if you can, have all your investor conversations for a fundraising round over a period of 2 weeks and no more. And I'll tell you why. Because if everybody is, and this goes back to investor language and investor psychology, if everybody is talking about you at the same time, they will be like, wow, this company's hot. Are my friends going to invest before I do? And they'll get much more excited and they'll move much faster. And then you can start to message, oh, look, I'm speaking to a lot of people. I'm trying to get this closed in the next 2 or 3 weeks. And then you create more fear and more speed. So it's an art and it's a science. But I would say, like, if you compress those investor conversations together, I'm talking about the first time you raise money, into as close of a period as possible, you will generate the maximum amount of buzz and you will close your round much faster. The biggest mistake I see a lot of these pre-seed founders do, I'll speak to one person here and one person there. Guess what? The investors don't prioritize you because they think that your round will never close. They see that it's moving slowly and they'll just prioritize people who are moving faster, and it is self-perpetuating. So you want to compress these conversations into a short period of time if you can.
That's so true. You're like, that's exactly how I feel. And that's great. So for example, if you want to just give us like some, like the top like three important criteria for investment. So what do you think? What are the like top three? Like maybe you can say like the trending topic or like the best founder feeling. So what are like your top three like traits for being an investment for a founder or the company or the startup? Yeah.
Sure. Look, it's going to be a little different for each firm, right? It's never going to be identical. But for me, the top three traits, I like to start all of my evaluation criteria with M. Why? Just because it's easy to remember. There's no rational reason. But the first one is the management team. So, what did we talk about earlier? Those qualities that make great entrepreneurs. That is the single most important factor in investing in a company. It is the team, it is you. You have to sell yourself, right? You have to look at people, across the world who pitch themselves. And I think you'll notice a lot of successful people do. But what I've also noticed is a lot of smart people, especially technical people, are very modest, very uncomfortable selling themselves. Well, guess what? If you're an entrepreneur, you got to snap out of it because you have to sell yourself. So that's the management team. It's the single most important M. The second one is market. To me, it's market. Is this a big market? And is it open for your idea to take market share? Market, right? People don't want to hear, oh, we can sell this thing for $50 million in a few years. Guess what? You'll get rich from that, but your investors won't. So they don't want to hear it. They want to hear that this could be the next $10 billion plus company, right? Market. The third, I would say for me, no, you know what? Let me not talk about mine. Let me speak more general. I like to see a competitive moat, right? Why is this thing defensible? Why is it hard for other people to replicate what you do once you're successful? And I think that's something that a lot of successful businesses have in common. Now, there's some nuances in that, right? A lot of people will, I'll tell you common questions that you'll get. So you might as well answer them. One is things like, why now, right? Why did someone not do this a year ago, 2 years ago, 5 years ago? Why is this the exact moment in history that your idea should happen? And I'll tell you another one, and it's related to the first M, management. Why you? So it's not just that you're smart. Why are you the right person for this idea, right? And these are some of the things that not just me, but a lot of investors look for when it comes to underwriting new investments.
Wow, that's a like the exactly like I was thinking about this because I've been reading a book. Maybe you also read it before, like Running Lean. It was exactly like saying the same top three things, like the founder and I mean the founders of the team, like the management team, and the second one is the market size. Like if it's not a market like available for you, then just don't do it now. So you can just do it later. And the starting with why is the key, kinda. So yeah, now we got the three top, top traits from your side, from your point of view. And yeah, thanks a lot for that. I think that's pretty helpful for everybody who's interested. And yeah, and what do you think about like of course we said like everybody wants to say yeah, I'm doing this because I'm the best person for this product, or I'm gonna work on this project because like my personal traits and also maybe like my business background is kind of open for this opportunity and stuff. And what do you think about like what traits do successful startups typically have in common from your perspectives, experiences? Because I saw in your LinkedIn like you have a lot of experiences with startups, so you probably like notice like some common things. So what was it, and what do you think? Also, can you
I
share a bit?
I stopped listing them too. I've got a bunch. Um,
No pressure, no pressure. Just just saying, it's great. Yeah, I love it.
No, and not always successful, right? I think you learn more from the ones that aren't successful than the ones that are. What are the common traits of successful startups? A lot of it ties back, and I don't want to repeat myself too much, but a lot of it ties back to the last answer around, what are the things that investors are looking for? We're looking for them for a reason. We want defensible businesses with a competitive moat. We want companies that are going after big market opportunity, and we want the right team running them. Now, between that, if you look at, SpaceX, right, and you compare it to, let's say, I was going to say TikTok, but that one, who knows, could get, banned. And it's not exactly a startup, came out of ByteDance, but the actual form factor can look very different. You know what I mean? Right? The form factors of these startups can look very, very different. So I don't want to over guide people on the criteria. The important thing is that it's defensible. And remember too that one day these companies should generate cash for the investors. That's something we forget. It's kind of boring. I almost didn't mention it here, but it's important, right? Like, this isn't a game of hot potato where just because your company's cool and can get a lot of users that people will back it. Eventually, it has to generate cash for somebody, or else we're just playing hot potato with startups and just passing them to other investors. Eventually, they need to be profitable, right? And that doesn't have to be in year two. In fact, I don't think it should be. If it's profitable in year two, you probably shouldn't be going to venture capitalists, right? But maybe in year five, maybe in year seven, maybe in year 10, but it has to be eventually. It's just the one last unsexy thing I have to throw in here because it does matter.
Love it. Great. So, and okay, so some hard questions are coming. Are you ready for that?
No, 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 no. Easy ones only.
No, no, no. Okay. Okay, I'll try to make it less harder. And where do you see the crypto world in 10 years from now on?
Oh yeah. Okay. I was warned some people may ask me for my predictions of crypto. Look, like, I don't know. I think I am not. I should warn first of all, before we even go on crypto, blockchain, Web3, that whole direction. I am not a specialist in this space, right? I do a lot of Web2 fintech, and I've looked at a lot of Web3 companies, and I've invested in some personally, uh, but I don't do it out of the fund. Um, so it's something that I keep an eye on because I want to make sure they don't eat all my other startups alive. But my investors don't want me investing in just yet. So, anyways, there's that look. I think if you look at the crypto world, speaking in the broadest sense, right? In 10 years, to me, I think what was missing from the last 10 years, or let's call it the last 2 or 3 years, where there was just a crazy amount of capital getting thrown at the space, was adoption. When people talk about adoption in crypto, they're talking typically, unless we're talking about, you know, trading Bitcoin or really basic use cases, we're talking about really small numbers compared to other startups, right? Um, and I think the real challenge is, how do you get my my mother, right, to utilize a lot of these platforms, or to get everybody to utilize these platforms. It's a small community of early adopters who speak to each other on Twitter and Discord and get each other excited. But the question is, how do you go beyond that, right? And I think if we're still having this conversation in 10 years, it's because a lot of these startups have been extremely successful. And it will be extremely successful because they figured out how to make it easy and appealing to use for, just your normal person, not just your hardcore early adopter and technologist. So broadly speaking, we have to drive adoption, and serious adoption, not just somebody has a wallet and they put a few coins in there and forgot about it, right?
Totally agree with you. Like, I think the user experience is gonna change like a lot of things in the crypto world and the Web3 projects. And actually, like last
I mean,
week,
that's what you guys are working on, by the way, for one thing. Sorry, go ahead.
Of course, of course. We're all working on that, I think, nowadays. So yeah, yeah, I think like we should just work on the user experience nowadays. And actually, like last week there was a meetup hosted by Reddit, and it was all about like Web3 user experience. And the thing is, like, it was like an open mic thing, and people were talking about like why Web3 space is like still scary for you, because some people are still like scared of after a lot of like things happened in the world. And then like most of them were sharing like, oh yeah, because we don't want to sign up with our wallets, we don't trust those websites, maybe they're gonna just steal our some tokens and stuff. Still, like, we need to maybe work on this, we need to develop more like better products, and so people can feel more secure and so on. But I totally agree with you, like that we should definitely focus on the like the adoption and the engagement strategies for the customers. And the probably like the customer experience is going to change like whole stuff in this world. And so yeah, thanks a lot for sharing that. And have you pursued any projects in the Web3 space? You mentioned about some like personal investments stuff. Like, you want to give us some more information, or also like if you don't want to share it, if it's a private project, so you can just share, some kind of like Web2 investments yet that you have done before, and then which is kind of your favorite ones, so we can just check this out, what kind of projects you like. So what do you think? Anything you want to share?
Well, I'll tell you one example. Actually, as of the other day,
Yeah.
I'm an investor in Polyverse. Personally.
Wow.
Yeah, no,
Amazing.
new development. I should have mentioned that at the very beginning. Um, where we go with this? Oh yeah, yeah. Another thing I was thinking about. We're talking about Web3 user experience. Just to go back, a lot of these conversations, you're talking about people are afraid of like, putting their financial information online. They're afraid of having a wallet, right, with their tokens. Look, people were saying the same thing about using PayPal, right, in 1999. I remember it. I was old. I'm old enough to remember that. So, like, there is, I think, a pattern to see here where, people got a little ahead of themselves. Venture capitalists got a little ahead of themselves with the Web3 space. That doesn't mean that everyone was wrong, and it doesn't mean that everyone is wrong. It just means that people tried to do too much too soon, right? The infrastructure wasn't there, the psychology wasn't there. But look, Web Web 2 was smoking hot in less than a decade afterwards, right? So these things go from hot to cold to hot again quicker than you can imagine, and in bigger swings than you can easily imagine. Now, some investment projects I've been involved in before. Um, well, before I worked for Kareem, I was an investor there. I was the only US investor at that company for a long time. Um, another one that I'm pretty proud of. I was an investor in Meluse in Brazil, which is a mobile wallet there that went public a couple years ago and was actually the first local tech company to go public there in like 20 years. And it was a very successful IPO. So it was nice to open up the gateway for other people. I was an investor in Cabbage in the US. That's with a K, not a C. And that one was bought by American Express for like 700 million. So it's a whole array of different things that I've been excited about. I'm honestly the most excited about the deals I've done in the last 2 years, but you probably haven't heard of any of them because they're all very young companies, so I won't bore you. But um, yeah, there's a whole handful of deals, and I mean, another one I love is Frete, which is like it's backed by Goldman Sachs. It's like the biggest a freight brokerage of any kind, happens to be digital in Brazil. It's a multi-billion-dollar company that has really transformed how trucking is done there. So this is a lot of fintech. If you haven't noticed, it's a lot of logistics, getting people and things around. I love that stuff. I think we're not done with it in Web 2 yet, but I think obviously we'll eventually revolutionize these things all over again using Web 3 technology.
That's perfect. I totally agree with you. And also, like, I'm curious about like the how long is the investment period for your fund?
The investment period so this is typical. For a venture fund, typically you'll have a 5-year investment period and a 10-year fund
Mm-hmm.
life, right? Now, the
Oh, okay.
reason that's not that straightforward, Merv, is that what'll happen is when an investor has finished making new investments, when they're just doing follow-on
Mm-hmm.
investments into their portfolio, they'll go out and raise a new fund. And by the way, this stuff is really boring, guys, but it's important to understand it because if you don't understand how venture works, it's harder to raise money from them. You don't understand their incentives. You don't understand what makes them tick. My best founder at fundraising in my portfolio, um, I'll go ahead and say his name. You wouldn't mind. He's a guy named Faisal Toucan. He's based in Dubai. He started like the Venmo of the Middle East. He used to be my intern years ago. He didn't like me saying that, but it's true.
Wow.
Um, and
Mm-hmm.
he's fantastic because he sat down and really studied how venture capitalists work. What are their incentives? What are their goals? What do their funds do? How do they work? And he knows how to. And I'll be honest, he knows how to manipulate them. I taught him that, right? And he taught himself too. And it's very, very important to be able to do that. I don't even remember how I got onto that subject, but it is very important nonetheless to understand obviously fund life. So for fund life, so typical venture fund, even though it's technically a 5-year fund life, because uh they deploy most of their new capital in the first 2 or 3 years. They're typically um, a typical 2 or 3 year fund life, and then they'll raise another fund. So, for example, we just did our fund one in 2020. Now we're raising our fund two, right? That's typically the cadence you'll see. I think we're a little slower than we could have been, but that's typically what you'll see.
Oh wow, I got it. Yeah, that's great. Yeah. So actually from my side I think that's it for now. So thank you so much Zach for joining us today and sharing your valuable insights with us. It was an absolute pleasure to have you on this like poly talk, and probably like the all the community and all the people, the audience has gained so much from your contribution. We appreciate the time and the effort like you took to be here with us. Thank you again, and I hope you'll have a great day in Turkey. And of course, yeah, I would love to like see you also in the US. Just let me know when you're here. And anybody who has any like questions or somebody, if you want to add something, just let us know. We can also invite you as a speaker now, or you can just contact with us via Twitter and stuff. So yeah, thanks a lot, Zach, again.
You kidding? Thank you. This was so much fun. And thank you all for coming. I know you guys are all very busy people, so
Yeah, thank you so much. All right, I think we are done. Yeah, thanks a lot, everybody, for joining us. We'll see you next week. Bye.
Bye, everybody.